Good evening, everyone. This is a review of the weekend report for Friday, August 3rd, or the week ending August 3rd. As always, we will go through where we are from a market perspective, quality index, overbought, oversold, as well as a detailed review of what is moving in the world, asset styles, and sectors. As always, this is a look as is and not necessarily predicting where we are headed. Always a good idea when trading to take a peek at where we've been, to understand how we got there, why we got there, and what type of support or resistance that we will come about. So the first, as we always do, we take a peek at where we are from the market. And still we are on a short-term basis. We've moved into a strong bull quiet mode, which is actually the most ideal for the bulls, in which, as you'll see, we are at a 4 SQN amount for a 25-day look back. And so we've seen clearly some strength here over the last 25 days. On a 100-day look back, though, we are in a neutral quiet standpoint and not necessarily a whole lot of substantial movement in relation to each individual day. So let's take a peek at the RL positioning, which is the regression line framework, which is when we take a peek at the RL10, which is looking back 10 days from a regression line to the RL30, we start to see a pocket forming and a possible turnaround. So describing some of the terminology, as you see, the light blue line is forming a pocket, which could be a good indication of this continuing, or we're on the watch for a possible failure of that. But we see pockets in the past. Here's one here. Here's a much deeper one, but it does give you opportunity to settle in and retest higher highs. From a risk Z perspective, which looks at the VIX moving average 30 compared to its 10, we are still in a risk-on position, and we are in the summer season, which basically means we're above the zero line and still increasing. So that is clearly a good opportunity for the bulls as well. However, from a overbought perspective, on a 10-day look back, we are clearly overbought, as well as the yearly look back, or the NDX 260. That, as I'll show you in a little bit, can be the NDX 260 can stay up in the overbought territory for a while. So it is something to be cautious of, or I should say aware of, but not necessarily something to be deciding an immediate buy or sell decision on. But the NDX 10 does give you somewhat of a short-term indicator of potential pullbacks. As you see, as we get up into the high 90s, you will get a slight pullback as people take advantage of that. And from a look back at the 200-day period, we're still at the 5% range. We've stayed here for a little bit, and that also is a bullish indicator. When we take a more deeper look at the market quality index, this is again on a very short 25-day look back comparison. We are starting to gain some strength, and we are interested as to will this start to challenge our late January highs. From across the world perspective, Latin America is very strong, which we'll see in a little bit, as well as the S&P 500 and the Dow 30. So we do see some strength in the U.S. side of things. As I mentioned earlier, this is the overbought, oversold, and in the last half of 2017, we stayed overbought for a long period of time, and obviously we had some significant growth during that stage. We started to create some variability at the end of January, early February, and that has now subsequently been the standard here for the last 6 months or so. When we take a look at standard deviations, are we at any extremes? And the answer is no. This takes a look at across the S&P 500, how many standard deviations are we in relation to the RL10, the RL30, and we're both well within range. We did see a pullback here, as I mentioned, that we might on an earlier video when the RL10 got above the 1 standard deviation. Doesn't necessarily always happen, but does have a tendency to pull back when it reaches above 1. As you saw back in January, we were at almost negative 3.5 standard deviations. So you can see the extremes and start to monitor against those. Excuse me. From a risk index perspective, we take a peek at this from a historical perspective. We're well within range and have been for a good part of a month or so, or a few months, I should say. And we're at roughly 0.9 now. Anytime you see such extremes, that is a warning sign that from extreme measures comes extreme moves, as we like to say, and we are nowhere near that right at the moment. So what's happening around the world, as we always start with the world, as I've mentioned in past videos, Latin America has made a very strong comeback here. It's up almost 9% in the last 20 days. It was up 1% in the last 5 days, or last week, and the Qs have started to rebound as well. So we have some possible turnarounds here. This actually is probably pockets that are being formed. Europe and Asia still remain challenged as the tariff battles continue to settle up. There could be a good opportunity here once and if that ever gets settled out. From an asset style perspective, we saw a little shift to the value side over the past week and 20 days. So you'll see the Russell mid-cap value has had a small gain, but the small caps 1.24%, the mid-cap value is at 1.3%. So you start to see a little bit of a shift here to the value side of the conversation. Question is, will that continue, or will people start to go back to the growth areas? When we take a look at the sectors, all the safety sectors are still remaining strong. The consumer staples, which we're interested in again, I formed a pocket, which I'll show you in a little bit. Healthcare, real estate, insurance, utilities, industrials, which we've been a fan of for a while, and financials are all kind of leading candidates from a strength perspective. On the other side, metals and mining, biotech, and home builders actually is something that we are going to take a peek at as well, which we may find some interest in. But right now they are a risk off or potentially a short. So let's take a quick peek at some of these in a little bit more detail. So this is the consumer staples, are the strongest of the sectors right at the moment. We have seen the strength index almost hit to the 100. When it does hit to the 100, we are quite interested in it. We did sell back here when the index was at close to 100 here and thought there may be a pullback. That appears to not have happened, but you can see the clear shift of the Sim Quality Index, in this case the Market Quality or Sector Quality Index, going from almost a -4 to now close to almost 4 on the other side. So we may be still getting at a point of extreme, but it can stay extreme for a while. The other one's the healthcare. We took a position in healthcare, which I'll show you. We think that there's some continuation here, at least from a short-term basis, as the strength and pile-on of momentum starts to continue. And we could see this stay up here for just a bit, especially with the intent to go more safety-based than the high-flying sectors. The others that we'll take a quick peek, if you look at metals and mining has clearly not been very well. It's rolled over a few days ago, and subsequently the strength and consistency indexes are down, and the historical index is down as well. So this could be a short, or we'll evaluate that in a little bit more detail. The biotech is interesting. Biotech has started to form a potential pocket. We should see next week if this will bounce. As you saw, it almost hit the zero, and I imagine we could see a particular bounce here in the next week or so, but we're going to let that settle down first before jumping in and actually see some momentum on the flip side. So another thing that we have added to kind of illustrate a couple of things is these are 4 key look backs at, and I'll explain them in a little bit more detail, but these are basically the top 10 and bottom 10 from a particular stats perspective, and makes it a candidates for a either swing trade or an intraday trade. So let me start at the upper left just to begin. These are stretch stats. These are when you look at the RL10 in relation to the RL270, which is the fair value, how many standard deviations away from its fair value is it? And so we've seen quite a good move in Kimberly-Clark and Ball Corp and HCA and Pfizer over the last few weeks. So you have to ask yourself the question, is this going to continue, or has this gotten too far away from the fair value? And that's a question for each individual investor. On the flip side of that is the Nielsen Holdings, who had bad earnings, Tyson, who comes out on Monday, Hanesbrand, Mohawk, and there's Facebook. So those are standard deviations away from fair value on the downside. And so are there good opportunities to take positions there, thinking that the value investor will come back and see opportunity since it's been beaten up so much? Me and the organization do like right now the Facebook as well as the Electronic Arts. Tyson Foods, we'll see how we did have a position there, and it stopped us out. We still like it because it's so undervalued here, but earnings do come out. AlphaStat is the relation to the market. So we look at it from a SPY perspective, and how much more gain has it had than the SPY in relation to standard deviations. So you see some of the same candidates of Kimberly-Clark. We did take a short position in Chubb, and we had a short position in Oracle. We have subsequently closed it for a small gain. And then on the flip side, the other way around, is the undervalue against the SPY. We did take a position in State Street a few days ago, and there are some other candidates that you see. Facebook, again, another one that I think is been overdone. In the lower left here, these are the first places I look for a candidate, and this is the SQN index. So this takes a look, are we within 10% of the historical SQN index? And right now, Ball Corp is at 134, so it's the highest it's ever been, or I should say in the past year, from an SQN perspective. So this is clearly very strength oriented, but typically they fall back within under their SQN as people start to see opportunities to profit on the high side. Same thing on the low side is that this is the worst it's ever been. And so if 0 is the baseline for the worst over the last year, these are now past that and are candidates for bounce back. Constellation Brands is an example I've mentioned in past videos. We did like it, went into earnings, blew away earnings in relation to what was expected, and was up significantly. Unfortunately, we got stopped out and didn't get to take advantage of that. This is a new view of things that will have to get explained in a little bit more detail, but you can look at in relation to the MACD, and we calculate MACD on a 1030 look back with a 5 EMA, and this is where it's positioned. So if you think of in relation to the MACD 0 line, below would be and rising would be spring, above the 0 line and rising would be summer, and then above the 0 line and falling would be fall, and then below the 0 line and falling would be winter. And these have significant candidates because they are for both shorts and longs. So spring plus and summer plus would be long candidates for us, and fall plus and winter plus would be short candidates for us. And what this does is it takes a peek at is it outside the Bollinger Band of that MACD and rising. And so it's gone an extreme of outside the MACD and in the case of spring, and now has started to rise. So it's gone an extreme, it's rising, could be a very good candidate to take a peek, to take a look at. And same thing for the reversals on some of these. So these are the top 10 or what qualifies as to qualify for these change of seasons. I'm very interested in this analysis as it goes forward because it does show the beginning of momentum in particular stocks. So, as always, and in fairness, we review the portfolio where we are since we've started. We started on July 9th with the first purchase of Boeing. We have cleared out last week 4 positions. Boeing, Schwab, Constellation Brands, as I referenced. It's unfortunate we missed that because it was a nice jump after that. And Northrop Grumman from a trade perspective that we referenced. So our portfolio is 2.6% in the market from at the time of purchases at 1.3%. So we've got roughly a 1.2.5 of an alpha, better than the market. So let's walk through a few positions that we did take since the last week, and Cardinal Health, State Street, Halliburton, and I think we've talked about Twitter before. On the short side, Thermo Fisher and Chubb are 2 shorts that we have taken on Friday. We're a bit concerned about Chubb because of Berkshire Hathaway having some very good insurance numbers. We'll be closely monitoring that. Thermo Fisher being in really the healthcare space, which is where one of our stronger sectors is a risk as well. So we'll have a short trigger on buying those back. But right now we're doing okay. Clearly that Twitter purchase was a day early. There was an additional 7 to 8% that fell on the following day. We didn't get the snapback, which is outside the model, but in true fairness, sharing it with you here. So let's take a quick peek at where we are on the sectors. As we always start with the SPY, this does show today's gain. Unfortunately, the first video did not survive, so you'll see Monday's results here as well. However, it should not make a difference. So we are, from a SPY perspective, as I mentioned earlier, we are in a possible breakout here with a successful Tuesday. We do like that, as this is the just really reaching the 284.70 range, which is really the short-term high. If we can break through that, then we will hopefully go test the late January highs. Quickly run through these. Financials, still in a long position here. We like it. Pocket forming, potential for a nice run. Has to get through this short-term support. We hope that that does pass there. Semiconductors, still like it. This is actually a nice breakout here, what's called the emerging dragon, and we do see all the way to the most recent high of the 110, so we could get another 2 to 2.5% out of that for the next evaluation. This is the biotech. We are not short, but we should have been short at the rollover. We have no position here. We will see. If it does fail on Tuesday, we will go short. The home builders, as I mentioned, I like the home builders. I like it even more after today, but I liked it going into the day, and because it's curling up, we could see a nice another run just like this. So we'll make an entry. If we didn't today, we should have. Materials we're still long. It's kind of chuttering along, but we'll be monitoring that. Industrials still very solid. We are trying to figure out if we're going to form a pocket or we're going to roll over. I still like this as kind of a bounce back to all the China discussions. We did close out a position here in the tech halfway through, and then subsequently we may be creating another entry here as the potential breakout. We may take the high of this and wait for the breakout there, but we could get in early there. Staples is the one we've missed. We should be in it. We should have been in on Friday. We did not, and we probably will get back in, but I'm cautious about that one because it has run so well. Utilities, we have no position. Healthcare, we added a position on Friday at the, looks like 89.39 level. That was the initial goal there, 50. We anticipate that to continue. There's not a whole lot, if you look back, to slow that sucker down. Consumer discretionary, we closed out a position. It's now looping back in. We can get into this one as well. Mining was one of our short ideas. We are not in a short position, although I don't mind shorting that if it comes about. As I mentioned, retail, we did take a position here on Friday. We just felt like this was starting to curl up, and as we start to get into the earnings of retail, we'll see how this pans out. But we have a short stop here at 48.74 with a goal of the high of the local of the last 2 months or so. Energy is an interesting one. It's kind of in its choppiness. We haven't held a position here for a while, although we did take a position in Halliburton, and we did actually day trade a Devon Energy as we saw some action there. So quickly review through the ones that we did own, closed the position, subsequently fallen. That's good. We do like Boeing, but just taking advantage of certain times. Cat fell onto our winter, which means it's rolled over below the zero line, as I mentioned. This is a concern. We will monitor that one closely. CSX has just been great, still running. Lam Research, a little bit choppiness, but still good. Constellation Brands, as I mentioned, we got stopped out, unfortunately, and had the big run-up on Friday. Latin America, still a position open, still like it. Schwab closed out, we got stopped out with a profit, but avoided subsequent losses. Broadcom, we are still in a position here, monitoring closely the semis. Tencor has been just great. We had a fantastic day, I guess last Monday, and we're still in that and gaining. FedEx just seems to be great. It seems to just keep running for us, which is fantastic. We may even add, I think we did add a second position here on the second. Yes, we did. So we shall add that position. We added this on this weakness. Added a second position as it crossed over the zero line with some confidence. So we now have two positions for FedEx. Monster has a short. Shorted it back here at 61.50-ish, and we've got $2 out of that. We don't see a problem just yet as to closing that position. As I talked to you about, Chubb took a position on Friday. A little bit of weakness here today. We are down slightly on that one. And Thermo went against us today. We thought it would be rolling over. If this breaks the 235.68 range, we will be out. Quickly, positions we've taken. Just been a great one. Cigna, this was just the day trade for some profit. Twitter's our problem child. We entered a little too late near the end of the day. After that first crash, we didn't expect this second crash. We do like this from a long-term perspective, although we may have to deal with some pain for the short term. State Street, still no catalyst yet to make it move. The merger, people are digesting to see if that is something that they're going to like. Halliburton hasn't done anything. It's building a base. We could see some good opportunity there. Cardinal Health, we took a position a few days ago. Had good earnings. People liked it initially, or did not like it initially, then liked it, and sold back down today. I don't have a problem with this just yet. NXPI is a new position we haven't taken. We did take a position today, but since the video didn't happen, did not want to forecast something that we haven't done yet. These are the two winter ones. I desperately want to short Corning. I have not done that yet, in part because I think this has just been too much of an extreme. Now, typically, this distance here between the fair value, which is the yellow line, and the green, which is the RL10, that distance there you do not see anywhere else. So somebody's got to win. It's either got to come back down closer to that 270 or the 270 will slowly rise. So we are interested in that one. We have yet to do anything. So that is it. There's about 50 or so. You can stop the video as you see fit and review, see how the performance has been for these. Those are clearly candidates that I'm interested in, and we would take a look at, is there any option activity or what have you to support it. So that is it for this week. Good luck and good trading.